Morning traders. Let's kick things off like we usually do. The dollar. It's been very flat, and it's the FOMC meeting obviously tomorrow, so people aren't jostling to take fresh positions, though it's in a wait and see mode, and that's why we're just hovering on that 21-day exponential moving average. RSI is a bit of no man's land; it's below 50, but yeah, we'll have to see. We're in a bit of a range here, and we'll see what the directional breakout is. Levels to watch, I'd say, are around here. There's a little bit of support at around 105, and below there we've got the 50-day simple moving average. On the upside, there's a tiny bit of resistance there at around 107. Above there, we've obviously got 1085 and then 109 around here. Let's move on to the US 500. So we broke out of that downtrend line. We're above the 50-day simple moving average, but we're kind of struggling to get above this 4K level here. Again, FOMC, depending on how hawkish it is, it's going to either hit risk or it's going to be a boost for risk. We could see another break below here, testing, these 3-8 levels around there. RSI 56, so it's above 50. The bias is still towards an uptrend sort of taking place, but we'll have to see what that FOMC meeting produces. Euro US dollar, again, contained very nicely by this 21-day exponential moving average there. You can see it's around 102.5, the resistance level, and above there, if we rally high, it's around 103.5. RSI below 50, so again, a shorting bias kind of via downtrend is intact. If we do see a break, I'd be looking towards, just trying to look at some levels here. I'd be saying around 1015. I'd be looking at a break below there, brings back into play this $1 euro US dollar parity level. We've got some big data points out for the euro this week. Pound's having a decent little rally there. We saw some sellers come in, obviously, but it's above its 21-day exponential moving average. The 125 level is the 121 level is a bit of resistance there, and above there we've obviously got the 50-day simple moving average around 122.39. There's a bit of support there at 121.5. That's also important. And then moving on to Euro GBP, we're seeing a bit of retracement lower here, tucked in a little range between the 50-day simple moving average and the 200-day. Let's see if the short sellers can push it back below there. The RSI's got a bit of room to run before oversold concerns kick into gear. Dollar yen, clinging on for dear life on that 21-day exponential moving average. There was a bit of support there too, with those lower candle wicks. RSI is above 50 for now, so by the dips, uptrend is still intact. In terms of levels, I think if we broke 134.5, that would be quite significant. And then below there, we've got the 50-day simple moving average of 133.8. On the upside, I'd be targeting those former highs there and then a couple round numbers on the way up. There's a bit of resistance there at around 137.7. Let us go to AUD/JPY to get a little sense of where we are. The risk sentiment's positive. It's moving dynamically off that 21-day exponential moving average. We are at a bit of a key level here in terms of the RSI. We'll see if it pushes above there. In terms of levels to watch, the 50-day simple moving average and this 96 is clearly resistance here. And then above there, you got the former highs at around 96.88. Let's look at gold, the yellow metal. It's run out a bit of steam here, as yields pushed high yesterday. Obviously, it's kryptonite for gold, and the targets for the bulls are 1750, the former range support. And then on the downside, the bears will be looking for another retest of 17. The RSI is out of oversold territory. It's in the high 30s, so below 50, as I said earlier, a bit of a downtrend bias intact. But we'll have to see if that can be continued in terms of the price rally. It was very oversold, 2 standard deviations below its long-term moving average. Oil, crude, it's struggling to get back above this 21-day exponential moving average and move above 110 and towards the top side of this range resistance here, with the 50-day simple moving average also providing some resistance. And then on the downside, we've obviously got the $100 mark, which the 200-day simple moving average is very close to right now. And that's it for today's Technical Tuesday. Short, punchy, and rapid, that you can catch it on the go, and trade the opportunity with Pepperstone. I hope you've enjoyed it. Thank you very much for tuning in.